Hi there, very good morning and welcome to Opening Bell. I'm Stacey Pereira and I'm here to take you through all the news and cues that could impact you through your trading day. So let's get straight to it and understand what we have, how trade is set up for us and what we're getting in from the handover from overseas. Well, if you look at the Dow Jones, that one is registering its longest winning streak since February of 2017. Now, this is also happening at a time when the US Federal Reserve will be meeting the FOMC meet. That two-day meeting kicks off today. So a lot to be looking forward to what we're going to see from the commentary that comes off from Chairman Powell. But because of that, we've also seen Asian markets barring the Nikkei 225, which is trading in the positive territory. But this is mostly happening because China has gone ahead and vowed support for the ailing property market, and because of which we're seeing Hong Kong, all the indices there, those have gained about 3% post those announcements that came from China. But if you look back home, well, the GIFT Nifty is indicating a muted start, we could say, for the broader index with gains of just about 33 odd points. So we'll have to see how the Indian markets really react to these global cues. But we did see the markets extending those losses from the previous session. Also Friday in the red, another day yesterday in the red. Sensex dropping about 300 odd points, closing in at 66,385, whereas the Nifty, that one also slipping below that 19,700 mark. So we have to see how all of this will really transpire. But if you look at the highest delivery that was seen and which stocks were seeing the most open interest, it was stocks like Petronet LNG, Godrej Consumer Products, HCL Tech, Crompton Greaves, as well as Bharti Airtel. Now, these were the stocks that saw quite a bit of the highest delivery percentage, one could say. But if I have to give you a setup of who's really pumping in money and who's not, well, foreign institutional investors now have sold shares worth about 82.96 crores as of yesterday. This is the provisional data that we got for July 24th, whereas domestic institutional investors, or DIIs, have gone ahead and bought shares worth 934.87 crore rupees this for yesterday. So that is pretty much a setup of what we have in front of us. A little bit of bearish tones, one could say, or more of a consolidation as we got really close to that 20,000 levels, and now a little bit of correction that we are seeing perhaps. But let me also give you a sense of what we are seeing in the F&O markets. Well, we did see 48 stocks which saw a long build-up. These include RBL Bank, REC, Canfin Homes, Navin Fluorine International, as well as Sun TV among those stocks. So that one with the long build-ups. Whereas if you've looked at the other side, the long unwinding, we saw 44 stocks that saw a long unwinding. This include Intellect Design Arena, India Mart, India Mesh, Berger Paints, Jubilant Foodworks, as well as Punjab National Bank. That one after reporting its results yesterday. Then we also have 42 stocks which saw a short build-up. This include Reliance Industries, Dixon Technologies, Shriram Finance, Kotak Mahindra Bank, as well as TVS Motors. Again, this is an increase in the open interest along with the price fall, which indicates that build-up of a short positions. Whereas on the other end, we do have 54 stocks which saw short covering. These include M&M Financial Services, Tata Chemicals, Aditya Birla Fashion, Coforge, as well as Balrampur Chini. Now, remember, this means that there's a decrease in the open interest along with the price increase that indicates a short covering. But let me also tell you the stocks which are under the F&O ban on NSE. Well, NSE has gone ahead and added Canara Bank as well as RBL Bank in the F&O list, in the ban list for July 25th, whereas they have retained Delta Corp, India Bull Housing Finance, as well as PNB into this ban list for July 25th. So those are stocks will perhaps not see those future and option calls, at least for today. But let me also then bring about all the earnings. Well, we are in the thick of the earnings season and we've seen quite a few results that have come in over the weekend. But the big one last evening was that of Tata Steel. Now, the Tata Group company has reported a net profit of just about 525 crore rupees in the first quarter, and this is down almost 93% if you have to look at it on a year-on-year basis, but mostly weighed down by its European operations. And the net profit was at about 7,714 crore rupees for the same quarter a year ago, and which is why that 93% drop is what you're seeing. Whereas If you look at the total revenue from operation, that one has come in at 59,490 crore rupees, which is just about a 6.3% lower against that 63,430 crore that it reported a year ago. Revenues, though, have clocked in around just about 5.5% lower against the 62,961 reported in Q4 in the last quarter. And the other earnings that happened last evening was that of TVS Motors. Now, we have a slew of auto companies that are coming out with their results today. We also have Tata Motors as well as Bajaj Auto. But if you have to get some indication from TVS, well, it has been riding on that phenomenal growth in sales and improved margins as well. Cost-saving measures would say have really kicked in along with that good product mix. So what we could say all in all, TVS did report about a 46% rise in its net profits, which came in at 468 crore rupees. This ending the quarter of June, whereas the Chennai-based two-wheeler as well as three-wheeler manufacturers recorded a 20% jump in revenues, which came in at 7,218 crore rupees as compared to the 6,009 crore that it reported the same period last year. So those were the pretty much those big earnings that we saw from both these players, and we have a slew of them even going to come back ahead today in the day. We're going to see Tata Motors, we're going to see Bajaj Auto, L&T, the big one there. We're also going to see Asian Paints. So a lot of these names that you need to be keeping out on your radar. But let's discuss how we're going to be looking at all of this and for some stocks and strategies. Joining me now is Rahul Sharma, the co-founder of Equity 99. Good morning, Rahul, and thanks so much for speaking with us here on Money Control. Let me first just quickly get your view on these two, since we highlighted both of these earnings stocks. Let me get your view on how one should be riding these post their earnings, especially. Tell us your view on Tata Steel as well as TVS Motors.
Well, very good morning, Stacey. And I think the numbers which Tata Steel has posted was not so much expected. But on technical charts, what we can see is that there is a decline from the top of around 118. And now when we are trading around 115, the next support levels for Tata Steel will be kept at 111. If at all these levels got breached, then I think the stock will again approach to the recent lows which were made in around in the May month. And those were around 104. So I think this kind of result market will not appreciate at this point of time. We are already trading at the all-time high levels, and few companies are posting decent numbers. So I think Tata Steel must be kept on the watch list. And if at all 111 levels are breached, one should take a call to sell it for a short-term period, because it will definitely fall to 104, 103 levels. And speaking about TVS Motors, brilliant numbers, and the company has been working good for this. And I think the charts, what is suggesting is that it has been consolidating from a quite long time. But on the upside, I guess it is very near to the resistance zone, which is around 1350 levels. So I think once it is crossed on maybe in today's session, we will see that.
Rahul, well, I have to interrupt you there because the markets have just opened up, and like we're anticipating, we obviously have to give it some initial few minutes to see what direction it's going. But for now, we could say at least opening up slightly higher, just 25 odd points, but in the green for the Nifty 50, at least on that 19,600, close to just a few points away from the 19,700 levels is what we wanted, and what it slipped off from yesterday. So just about 0.12% higher. Bank Nifty also there getting on to that 46,000 levels. Well, that one was also something that was breached yesterday. It had fallen below that 46,000 level to about 45,900 odd points. The mid-cap indices, that one also there trading a bit in the green, but just marginally, one could say. The small caps, those ones have been really the ones outstanding or outperforming the blue chip if it has to be. But if you look at the sectoral front, well, the IT index, they're continuing to be that laggard, because we've seen the IT index in fact fall almost 4% in the previous two sessions after Infosys' results. Even the FMCG sector has been come under tremendous pressure after HUL's results, but they're again in the red. But if you look at pharma, that one has a couple of earnings that are anticipated tomorrow. We're going to see Cipla as well as Dr. Reddy put out their quarter 1 results, and maybe in anticipation of that, we're seeing some little bit of respite. But in the green, the Nifty consumption stock also, they're pretty much unchanged, one would say, but quite choppy for that matter of how one would gauge it. Metals index too in the positive, perhaps from that stimulus announcement from China is something that could really boost metal players. The fact that they are going to pump in more money into the property businesses, that is something that will give a hope rather, and which is why we're also seeing the Hang Seng today almost 3% up. Realty index as well, they're up 0.73%. So all of those counters are really in the green, whereas you have the other ones like IT, which are still laggards in the red. But let's get you up to speed with who's the top gainers and the losers. Well, we do have Hero Moto, Tata Motors and JSW Steel in the top gainers. Tata Motors definitely after its in anticipation of its earnings perhaps, and Hindalco, Britannia, Power Grid are the other names coming up there in your top gainers list, whereas Nestle India, Eicher Motors, Bajaj Finance also there in comfortably in the green. But let's look at the losers then. Well, those ones we're seeing ITC, of course, after that demerger plan that they were talking about, the hotels business going to be demerged from the main company, although that will hold a 40% stake in the new entity. But that one now they're down and about in the red. Asian Paints too, that one in anticipation of its results, of course, as well as Infosys, the biggest drag, the biggest laggard, really the one pulling down even the Nifty IT index. So that is your top losers. Tata Steel again after its results, 93% drop in its profits is not something that the street would take in. In fact, Rahul also just spoke about why one would have to look at it in caution. But the other names are HUL as well as Maruti Suzuki. They're down and about in trade in the red. You also have Wipro, Tech Mahindra and HCL Tech. So pretty much those IT names that we're seeing in the red, and which is why the IT index also down there. A couple of earnings anticipation, Tata Motors in the green, although Maruti in the red. So we'll have to look at that space quite, I think, individual stock wise, and which is why we'll go back to Rahul to ask him how one should be viewing these different sectors. Rahul, you did give us a take on how these earnings will be looked into, but the bigger ones today, that of Tata Motors as well as Bajaj. Now, this whole auto space is something that really gives us extremes, one would say. So how is one supposed to be looking at autos at this point?
No, definitely, Stacey. I think autos will remain in focus. Even I think not only today, but sector-wise focus, we will see then it will remain at, especially at the PSU basket from the banking sector, then pharmas, and then auto. I think the tremendous performance from auto sector, which we have already seen throughout this year. If you'll ask me about the returns, Nifty Auto has particularly given around 25% return in year till date. And I think these kind of growth and returns will be continued from auto and auto ancillaries both. And I think as pharma has not played well, I think the next leg or we can say the defensive side of play when the market will be in correction or maybe in consolidating mood, I think pharma will be the one sector which will be playing out.
Right. So we will be looking at the pharma space. In fact, with those results coming up tomorrow, that will be something in focus. But Rahul, do stay on with us. Let me also tell our viewers a little bit more about other stocks that are going to be a buzz besides the ones that have their earnings. Well, we also have Reliance Industries, which has now gone ahead and partnered with Brookfield Infrastructure and Digital Realty for the India data center business. Now, RIL will hold about a 33.33% stake in each of the Indian SPVs, as well as become an equal partner as the Reliance JV now will be developing data centers in Chennai as well as Mumbai. The JV will also be branded as Digital Connection, a Brookfield Geo and Digital Realty company. This will be interesting to see, especially getting into a new space for Jio after this demerger. A lot of hype around what they're doing. Well, the results were quite mixed bag, one would say, for RIL. But now they're coming up with these more M&As, and especially into this whole data center business. That is something interesting that we're going to be looking out for. Now, another stock that you should be keeping on your radar would be that of LIC Housing Finance. Now, why is that? That's because the company has fixed August 18th as a record date for the purpose of ascertaining the eligibility of payments to the members in terms of their final dividend. This is something that all stakeholders and shareholders are looking forward to. Now, the final dividend, if approved by the members at the 34th AGM, will be paid to the eligible members within that stipulated period of 30 days from that AGM date. So we are going to be looking forward to that. But now that we know when that record date has been set for August 18, we can mark that on our calendar, especially if you're an investor in LIC Housing Finance. Let me also tell you about SJVN. That stock is also going to be in focus. That's because the government of Arunachal Pradesh has allotted about 5 projects which total to about 5,097 megawatts to the company. And the project allocations are done at 3,097 megawatts in Ethylene, as well as 690 in Etunilin, and the others as well. Now, the 5 projects are located in Dibang Basin, is what we're given to understand, which will result in the optimal resource utilization as well as timely completion of the projects. This is what the company is looking forward to. So definitely order wins is something that this company will have to be keeping on the radar. But let me go back to Rahul now and ask him how he's looking at the technical charts, because we were so close to that kissing distance of 20,000, but now we're back into this consolidation mode. So are we likely to see more red in the days coming ahead, and what will perhaps be those headwinds that we need to be looking out for?
See, Stacey, I think I feel both the indices or the market has not lost the bull grip. Yes, particularly good money or returns are coming out of from the stock specific action. I have been saying this that we should not chase index at this current position. Earnings season gives you immense opportunity to go stock specific. I believe 19,500 on Nifty and 45,000 on Bank Nifty, if not breached, the market will remain in uptrend only, or might go sideways, but the view will remain positive. Sector, as I told earlier, to be focused on should be, especially from the banking sector, PSU basket looks really good, pharmas and autos. Immediate support on Nifty will be placed at 19,620, followed by 19,500, which is a bigger and stronger support. And on the upside, I think resistance will be kept at 19,800, 19,850 levels to reach 20,000, which is likely not going to happen like anytime soon, because market has been resisting on the higher ends. Having said that, I would also suggest a cautious view, especially to the day traders, as market may behave volatile, as we are still near all-time high levels, and heavyweights have not been posting great numbers. Market may try to price in such events. Bank Nifty, which I believe is much more stronger for coming days, support on the immediate basis placed at 45,800, followed by 45,700 and 45,500 as a stronger base. And on the upside, resistance or hurdles will be 46,150, 46,350 levels for Bank Nifty. Definitely, as we have seen, that all-time high levels are resisting from going beyond 46,350 levels.
Right. Thanks for giving us your levels. But before we let you go, Rahul Sharma, please give us and our viewers a quick picks that you would want or recommend for our viewers. What are the stocks that you are personally looking at this point?
Definitely, Stacey. See, first stock will be BHEL, which is trading around 98, 99 levels. The target for BHEL is placed at 105 and 110, keeping stop loss at 94. I think the market is likely to watch another upside rally. And second selection will be Saturn Credit, which is trading around 196. The target levels is at 210 to 215. Stop loss will be kept at 186. The third selection is Anmol India, uncommon name, trading around 50, 152 levels. I think the target is set for 64 and the stop loss should be placed at 48. On technical grounds, the stock has recently faced small correction, but still trading above all important exponential moving averages. And as the company has reduced debt and PAT by around 45.5% CAGR over the last 5 years, Company has also recently allotted bonus shares of around 4:1. So that gives immense confidence in this company in Anmol India. So target is placed at 64 and stop loss should be placed at 48 levels.
Well, thanks so much, Anmol, for that. 3 picks coming in from Anmol that you could be looking out for. But thanks so much for giving Anmol one of the picks from Rahul Shalva that he's giving for our viewers. So thanks so much for speaking with us. But let me also bring in my next guest now. Sandeep Raina joins me. He's the Executive Vice President and Research for Nuvama Professionals Client Group. Thanks so much, Sandeep, for giving us your time and speaking with us. Let's get a sense of how are you looking at the markets. We were discussing this before. Are we likely to expect, now that we are at this all-time high levels, are we likely to see more consolidation, more correction, or 20,000 shouldn't post these earnings? That is something that could take us towards 20,000.
Right. Thank you. See, market is looking good. I don't think so anybody in the stream can say the market is not looking good. The only thing is from here, what needs to be done? Now, see, we need to understand that in last 3-4 months, we have taken a rally of 3,000 points in Nifty, which is around 22%. Now, from here, can we see a 500-600 points correction? I won't be surprised. Can we, break 20,000 on the upside? Possibly, yes, given the fact that, the results are reasonable. Banks have done very well. Reliance result was okay, which is these two are big portions of Nifty. Coming to IT, yes, the numbers were not good, but I don't think so downside is there, because if you look at company like Infosys, TCS, I don't think so there's major downside left from here on, maybe 5-7% more. So given the fact that where we are, I don't see there can be a big correction, maybe 19,000, 19,500 can come in. But this is the time that you look for mid caps, which are growing at 20-25%. There are many, there are ample number of stocks. And this is the best time to actually get into stock because, the results are out and results will be coming soon for many, many companies. So that is the time, look for companies which are doing well, the commentary is very good, and then buy those companies also.
So, Sandeep, would you suggest that one should be looking at the mid caps and those broader indices at this point rather than looking at the main blue chip ones, or they should wait, and what should the strategy really be like?
I think I always go for mid caps because, in large caps, generally, these are compounding companies. I never see that large cap will grow 50% unless there's a deep correction happen in the market. Generally, large caps will give you a good compounding 22%. But one more fact is that the downside will be limited, in large caps. But I always prefer mid cap because in mid cap story, you can make more returns. And we have to look for company. Basically, we have to follow 2-3 roles. One, can these companies be cash flow positive? Is there a moat around? Can these companies grow at 20%? Is there any corporate governance issue? If these 4-5 things are there, I think mid cap is something we should always look for, and they will make more returns. And there are many right now. Like there are few sectors like capex driven sectors doing very well. Mid cap banking doing very well, more better than the large cap banking. In fact, mid cap IT is doing far better than the large cap IT. So I'm saying mid cap is the flavor, and we should go for those.
Right, Sandeep, let's look at the broader picture now. Look at a couple of factors that could really impact. We are seeing, terrible rainfall across the country. This El Nino effect also perhaps taking over. Is that really going to come into play when it comes to your consumer discretionary inflation numbers, even though they have come down now? We've seen skyrocketing food prices. So how is that going to really play? And are we going to see that then trickle down to those macro indicators as well?
See, these kind of events actually gives you time correction sometimes or price correction. Now, I am not too worried on these things because this is something which is known to the market already. So inflation will be high going forward. We all know that. There are floods across the country and in many parts in North India. We are aware of that. And market understand that and digests the news very, very fast. So maybe this can give you some correction of maybe 2-3%, 4% max. But then we have to look for, I'm saying we have to play positive. The way to play positive, look for companies which have fallen and which should not fall, or the huge impact is not there, right? Maybe a quarter will go away, but then the next 2 quarters will again come back and the EPS will improve further. So I'm saying that is the way we should play right now, rather than looking for the, problems that we have in the market. Problems will give you some correction, then you have to buy. That is the way I will play.
Right, Sandeep, what about your take on the IT sector? Yes, we've been seeing them down and about, but if we have to look at the Fed, we have the FOMC meet, which will kick off today, and we are likely to hear Chairman Powell, come Friday morning. But what is the sense? They took that pause, and now maybe another 25 basis point hike is what everyone is already anticipating or factoring in. Could that have implications here back home, and what are they likely to be? Which are the sectors that we could see? Would IT, would it be banking? Which are the sectors that one should be cautious about because of this fact?
See, whatever Fed does, like 25 bps, because they have been talking about in last 20 days, we'll see in the press that now they don't want to take a pause. They will do a 25 bps increase. I don't know what they'll do. Let's say if they do 25% all 25 bps also, nothing much will impact. There may be a small correction. That's about it. And it's not that they will increase 1% from here in next 1 year. Nothing like that will happen, right? Because they're already at the peak of their interest rate cycle. So I'm not worried on that. That will just give me a small correction. Now coming to these events just give you short-term correction. But nothing will happen to my IT sector or my consumer sector in India or my capex-driven sectors, because we are going full throttle for capex, both in the private and public space. So nothing will happen to these companies, right? So I am not worried. I am not worried at all. I think these are just noise that we should just, read and forget it about it. So unless he says I'll do it 1% over the next 6 months or 8 months, then I'm worried. For 25 bips, frankly, I'm not worried.
Right. Are there any other headwinds that one should be looking out for, rather the tailwinds then that could actually drive this market further ahead? What is your view on them?
See, in totality, as you discussed, there are few points that you should look at both on the positive and negative side. Coming to negative, what you said, monsoon, yes, Fed, yes. Most important, I think, which is, for any fundamental analyst, it's important what the market commentary is there, what the managements are saying. It's very important to listen to all the con calls. What are the management saying? I think that is most important takeaway. If you ask me next 15, 20 days, I will do, and as an analyst, everyone does, that what is the commentary, and then also do a lot of channel checks. What is happening in the market? Is it happening that what we are thinking of being bullish or bearish being happening or not? So if those things are correct and we are doing it well, I don't think so we should be worried across this thing, and we should be accordingly buying or exiting or reducing position based on the commentary and the feedback from the ground.
Right. Well, Sandeep Raina there, thanks so much for giving us all of those insights into how one should be looking at the markets right now. But yes, like he was pointing out, the next few days should be concentrated on earnings and the commentary that we're getting from management. And you should be coming right here to Money Control to be getting all of those updates of all of these big earnings that are trickling in. Well, with that, it's a wrap on this edition of Opening Bell. We will be back with the same place, same time tomorrow with more details of how the markets are going to go ahead. But from everyone putting this show together, thanks so much for tuning in.